In this video, I'm revealing to you one of my best strategies, one of my easy strategies. It works all the time, most of the time it's there. You're gonna check out into your charts and you find it happening almost every single day. All you have to do is to watch the whole video till the end. See you after the intro. Hello, for those who don't know me, I'm Henry and I've been sharing all my ideas about trading on my YouTube channel. And in today's video, I bring you something special. This is one of the easy strategies. Even a beginner can, use this same strategy. I have brought, I've not been posting for a while because I've been busy. A lot has been going through my life, but I have actually made this video. And hopefully you watch it till the end. Because when you don't watch it till the end, you won't get the whole concept on how to use the strategy that I'm going to reveal to you. Watch the whole video, like it, and subscribe to the channel in order not to miss anything that I release. I'm going to be releasing many videos this time along, and hopefully you get something from all the videos that I'm going to be uploading. You can even check the recent ones. Without wasting time, let's get into it.
Okay, so in this strategy we use only 2 time frames, and one time frame is for the order flow, and that is the daily. Okay, so the daily, we use the daily time frame in order to get our order flow. So this is our time frame. Okay, then the 1H or 1 hour. So this is where we get the market social shifts or what entries. So this is our small time frame. Right. So price moves in only two ways. It is either taking down internal range liquidity or external range liquidity. What is internal range liquidity and external range liquidity? It is here. So if we have like a bearish market, for instance, so it forms higher highs, lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. But these highs are our internal range liquidity, IRL. Sorry, let me first Oops. So IRL stands for internal internal range liquidity. Okay, then ARL stands for external range liquidity. These are the keys. Okay, so this is not IRL. Sure. How do we see that this is our internal range liquidity or external? Is by highs. Highs and lows mean external range liquidity. So this could be ERL. Okay. And then inside of it is our external range liquidity. How how do we consider that this is internal range liquidity? There might be something like order block, fair value gap, something like that. That is what normally I look for: order blocks and fair value gaps inside the internal range liquidity. You might find out that there might be some forms of liquidity also, like double tops or double bottoms, but that's what I look out for: order blocks and then fair value gaps. So maybe there is some fair value gap here. This is a bearish market. Okay, so this is our internal. IRL. Okay. Oops. Okay. Okay. You might find out that there is some also other internal range liquidities. Maybe there is another block here. It can be IRL as well. Okay. So on my daily time frames, where I mark the external range liquidities, and then in the internal, I use the 1H to mark out the internal range liquidity. So what is my plan about this trading strategy? If I have a high, okay, if I create a high, for example, for this particular teachings, I'm showing you how you can go from internal range liquidity to external. Okay, next teaching I'll do from external range liquidity to internal. In this particular teaching, I'm showing you how you can go from external range liquidity to internal range liquidity. Okay, in the next one, that's when I'll show you other things. Okay, so provided provided we have this, okay, there is this external range liquidity that has been taken, right? Yeah, so this is our external range liquidity and it has been taken out. Okay, so what I'm doing is to look for entries in order to go to the internal range liquidity. Okay, so in my 1 hour time frame, I'll look for a market structure shift, then I look for another internal range liquidity inside this particular market structure shift. Okay, so get a market structure shift from here. Okay, right here. Oops, sorry. I get this market structure shift. Okay, so after having get that, I look for a fair value gap order block from this market structure shift that has occurred here. Okay, then I'll look for entries in this 1 hour time frame. There is some liquidity here, the internal range liquidity, which is another block of fair value gap. So maybe it's somewhere here. It's okay. I look for ways of taking that. Let's say that this is a fair value gap, so this qualifies to be our IRL. Okay, so my direction for price is going to this internal range liquidity. What I'm focusing on is to take out this internal range liquidity. So I would maybe, okay, it makes this. So I wait for it to retest back into this, then I buy up to this level. Okay, then I to put my stop loss on this low, and then I hold up to this internal range liquidity. It's a very easy strategy. This is the plan that we have for it. All right, so let me give you a clear example on how you can use this. Okay, by looking at this price action over here, you see here there's this low. So this is our external range liquidity, and it has been taken out. Okay, so this is our ERU. So our internal, I have to drop into the smaller time frames like 1 hour in order to look for the internal range liquidity. There is also this high as well from just here. Oops, around here. This is also another external range liquidity. Drop into 1 hour time frame, and we have this fair value gap right here. Okay, so my plan is to fill this internal range liquidity. All right, so when I go back into here, you can see there is this order block. Okay, I can start trading from there is a market structure shift here, but I'm going to use this vacuum block right here that is present here. And when I look closely, there is this order block. So I'm literally trading this order block here. So now what's next? I will just buy from here, and then I put my stop loss over here. I hold up to this level. This is my target. Okay, but now since I'm an intraday trader, you can see by the hour take profit was hit successfully. Since I'm an intraday trader, I would like to trade almost every day, so the trade might take some time. Hence, I would have to drop to 15-minute time frame so that I can get entries almost every single time. Okay, I just know that I have to take this, so I just look for the price action here. Every time I take out a high, I buy. I find possible ways of buying. Okay, so there is this one, equal highs. They were taken out. This is also another form of liquidity. It was taken out. I look for my buys in the internal range liquidity, which was this fair value gap here. This candle and this candle. I put my stop loss below this low. Oh no, just below this low. Okay, this low for the fair value gap. I buy from here. Stop loss over here. I take out this high, and you can see it was hit successfully. Right now, if I look at this high and this low, there is some internal range liquidity. There is this fair value gap, but it's too big. I can trade this, but I have to drop down into smaller time frames for the entry, because I can't really take all this. This fair value gap is too big, so I would have missed that trade. But okay, then there is this high. You can see that it was taken out as well. The body has to completely take out the high. Okay, it's only that we can use the wick on the daily time frame, but in small time frames we have to use the whole body. The whole body has to close above it. Okay, so when you look here, there is this liquidity here, but this fair value gap was taken out. Then it took out this high, so I wouldn't get a clear entry. What I can do in this scenario is to use Fibonacci levels. I get my Fibonacci, I draw it from this high to this, from this low up to this high. These price legs, they are good. I draw it from there up to there, so I just buy from the OTE, which is this level. Okay, I will send you my Fibonacci settings in the next video. So I buy from here, put my stop loss on this low, then I can hold this up to our TP level, and you can see it was a very nice trade, very beautiful, offering us many entries. Okay, you can literally use any model that you use in ICT in order to trade this. Alright, thanks for watching, and hopefully you backtest the strategy, it works out. I know it would work for you. Just make sure that you put in effort, and then everything would be good. I know this strategy is good for you, so go and backtest it, forward test it, and you'll find possible setups. Alright guys,